more crushing economic news for the American people this afternoon. The Federal Reserve announced another massive interest rate hike, 0.75 of a percentage point. A move that seemed unfathomable to many just months ago has now happened twice in a row. The increase translates to Americans paying more money for things such as mortgage loans, credit card bills, car loans, student loans. Today's hike, of course, was not unexpected. In fact, the Federal Reserve Chairman Jerome Powell hinted at it last month and said another raise is the best way to cool down inflation. But that takes time, and it will provide no immediate help for the millions of Americans who are struggling with higher prices on rent and groceries and energy bills. Let's bring in CNN's Matt Egan, who's at the Federal Reserve for us right now. Matt, why does the Fed think that making Americans pay highest interest rates will help the economy?
Well, Jake, no doubt this is some tough medicine from the Federal Reserve, because not only are Americans dealing with the worst inflation in 40 years, but now they're getting squeezed by soaring borrowing costs, credit cards, student debt, car loans, appliances, and of course, mortgages. In fact, the spike in mortgage rates is already slowing down the housing market. But what's important here is this is a feature, not a bug of the Fed policy. They're trying to cool off red hot demand in the hopes that it's going to give time for supply to catch up. But the problem is that if they do too much, they're going to freeze this economy and cause a recession. And this is not an exact science, Jake. They won't know they've gone too far until it's too late.
What does this mean for the chances of a recession?
Well, the fact that the Federal Reserve is moving so aggressively to raise interest rates does make this a dangerous moment for the economy. I mean, this was not the plan. They preferred to just tap the brakes on the economy, just gradually raising interest rates. But they don't have that option because inflation keeps getting worse, and they were late to this inflation crisis, and so they have to slam the brakes. Powell addressed this question head on today during the press conference. First, he said he does not believe the U.S. economy is currently in recession. He said the jobs market is way too strong for this to be a recession. Secondly, he said he thinks that there is still a path to get inflation under control without causing a recession, though, Jake, he conceded that path has gotten narrower.
Is there a chance that the Federal Reserve will raise rates again next month in September?
Yeah, absolutely. There is a very good chance that they raise rates in September. Markets are anticipating it. The Fed's statement hinted at it. The chairman signaled that that could happen. I think the big question is, how much do they raise interest rates by? Powell said that they wouldn't hesitate to do an even bigger rate hike if that's what they thought was necessary. But he also left open the possibility that they slow down hikes. Listen, the next meeting isn't for 8 weeks. That is an eternity in today's economy. So a lot is going to depend on what happens to the economy.
All right, Matt Egan, thanks so much. Today's announcement is another body blow to struggling Americans. One nonprofit says it's received nearly double the amount of calls from people asking for help. CNN's Gabe Cohen talked to some citizens about the serious impact these rate hikes are having on their lives.
Thanks to interest rates, Sephora Miles is house hunting in D.C. with deflated expectations.
I started looking at houses in the 500s, 550 range, and ended up coming down to about 384, maybe 450 as like a hard stop.
Because of mortgage rates?
Just because of the mortgage rates, yeah.
Mortgage payments on a typical U.S. home are up 62% in a year, costing Americans hundreds of dollars more each month. And they'll likely keep rising as the Federal Reserve raises interest rates.
Some people say they want to wait till the wreckage is done.
I don't want to have this large interest rate looming over me.
The Fed's latest rate hike could drive up the cost of car loans and credit card debt, too. Americans owed $840 billion in outstanding credit at the start of 2022.
It sneaks up on you.
Gary Herman runs Consolidated Credit Solutions, a nonprofit that helps people solve debt problems.
We have seen a dramatic increase, almost double the number of new people calling our office looking for help with credit card debt, and that's just been in the past 2 months.
The Fed's rate hike aims to cool this 40-year high inflation.
We're trying to do just the right amount, right? We're not trying to have a recession.
but in the short term, it's one more strain on Americans.
We're in a really crazy time right now.
Consumer confidence is down for the third straight month. And according to one poll, 65% of American voters think we're already in a recession.
I've noticed gas has gone down, but groceries still have not gone down. Fruits, vegetables are keep going up, so I'm pretty concerned.
Nicholas Godfrey keeps tightening his budget in Atlanta.
We're having to cut back a lot right now just to get by.
In a survey by Morgan Stanley, 2/3 of U.S. consumers say they're planning to reduce spending in the next 6 months, especially on big-ticket items like home appliances and cars. Rob Shane's clunker has no air conditioning and a violent shake, needing $7,000 of repairs.
The mechanic told us we shouldn't drive it any further than we're comfortable walking home.
Why haven't you bought a new car?
Can't afford it. Plain and simple. I mean, we can't afford it. Prices are too high. Interest rates are too high.
But now his wife is pregnant.
Would you put your baby in this car?
Absolutely not. I wouldn't put my baby in this car.
So outrunning the market may prove impossible.
So we just want a safe family car that can get us around town. When is this going to kind of come back to earth?
And Jake, that's the question so many Americans are asking. And as prices keep climbing and the cost of paying off that debt keeps going up as well, it's going to become that much more important for families to have a financial plan month to month just to make ends meet.
All right, Gabe Cohen bringing us the human cost of this. Thank you so much. Appreciate it. Joining us now to discuss, Democratic Senator Chris Murphy of Connecticut. He's on the Senate Appropriations Committee. Senator, you just heard one man talking about how he can't even afford a safe car for his family, and a woman talking about not being able to afford a house because of these skyrocketing mortgage rates. What's your message to not just your constituents, but all Americans who are already struggling are now going to have to deal with the consequences of another rate hike?
Well, I think your point there is really important. Americans were struggling before this rate hike. They're going to be struggling after it. And we have to recognize for most Americans out there who are earning $30,000, $50,000 a year, they've been living in crisis, paycheck to paycheck, unable to keep up with bills for years. And so we need to address these structural unfairness in the American economy that allows it to do so well for the CEOs and for the billionaires and millionaires and undermines security for American families. So this rate hike is necessary, according to the Fed, in order to cool what your own reporter says is white-hot, red-hot demand in a 3.6% unemployment economy. But there's no doubt that it has impacts. And to me, this is just another reminder why we need to take a big step back and figure out why, for so long, ordinary Americans who are working for a living have been getting screwed, and the folks at the very top of the economy, no matter whether we are in an era of economic expansion or contraction, seem to do just fine.
I know I'm a broken record on this, but there's something President Biden could do to get rid of the to bring the cost of living down for Americans, and that's to get rid of the Trump-China tariffs. That would bring prices down significantly, saving families hundreds of dollars a year. I know that President Biden's worried about the impact this could have on union members. Do you want President Biden to lift these tariffs?
Well, I think you've got to judge the short-term impact of that versus the long-term impact of rebuilding American manufacturing that will deliver good-paying jobs to American citizens, right? I mean, ultimately, we got into this position because we did outsource millions of jobs to countries like China. We lost that blue-collar aristocracy that was making enough money to be able to afford to live and put their kids through college. So, to me, resourcing American manufacturing and having a trade policy that effectuates that end is actually the solution in the medium term and long run to this cost crisis and this wage crisis that confronts a lot of Americans.
All right, but you're talking about an institutional reexamination of the economy. I'm talking about a short-term relief for individual families. Get rid of the Trump-China tariffs. I don't think you supported them to begin with. You get rid of them, and I've seen Fred Hochberg, formerly of the Export-Import Bank under Obama, says it could bring down prices $500 to $1,000 per family. There's a solution that would help Americans right now.
But you are also seeing the beginning of this reshoring of jobs that had previously been moved over to places like China. So you are right that I didn't support every aspect of the Trump tariff plan, but I do support the idea that we should use trade policy, including tariffs, to try to have long-term growth of manufacturing jobs in the United States.
But what about the short-term solution? I mean, Democrats control the White House, the Senate, the House. Is there something that your party can do? You control government now. Is there something you can do right now to help struggling Americans who are now being asked to solve the inflation problem by having to pay more in credit card debt?
Well, we're going to do that next week. We are going to pass a bill that's going to dramatically reduce healthcare costs for American consumers, and in particular, fixed income seniors who are often the hardest hit, like in moments like this. Not a single Republican will join us as we try to trim the cost of prescription drugs, but next week we will pass through the Senate a bill that will dramatically lower prices, healthcare prices for millions of Americans.